Hey guys, alrighty. So we had a nice little drop today. Markets came out pretty bearish overnight after that 3-day weekend. Bears were able to put some work in today. I was very impressed with them once again. I mentioned last week that I felt like the bears, or at least sellers, were finally starting to show back up in this market, and that the bulls did not have very easy times anymore. So tomorrow is FOMOC minute day, very important day. I think this one's going to be interesting. So something I thought was interesting is 5 of the last FOMOCs, all but one of those was a sell-off. So what I mean by that is once 2 p.m. hit and we got the minutes, all but one time the last 5 FOMOCs we dropped. Now the one time we did pop, it was a big, big pop. Now that was also back in, I think it was November. So, very much so a different time period now. I think the fact that we had the hot CPI, the hot PPI, markets are struggling right here, right now. With earnings season, I think we could get a pretty negative reaction to FOMOC minutes. Markets didn't really properly, in my opinion, react to FOMOC in January. Again, I was expecting a pretty bearish move, but we got a bullish move. So now the question is going to be what happens tomorrow. We also get a very important NVIDIA earnings tomorrow night. You can see it had a pretty bearish day. It was down almost over 6% at one point, which was the second worst day in the history of the stock. I was looking through the history of basically chips and stocks, and I have a feeling that we might see a miss on NVIDIA. I'm really, really curious how that's going to play out tomorrow. But looking at SPY right here, on Friday, we put a new supply in at 502.07. That is our top. That is our resistance right now. You can see we kind of came up, we failed, we're down here. So we do have a nice doji reversal to the upside. We did hold on to 496.7 demand. That was from here on the 14th. So, this was a similar candle we had on the 17th. Even really, you could look at the 13th right here, the similar candle. We didn't get under daily 20 EMA support. We came close to it, but then we bounced. But we are under 8 EMA support. The bulls are going to need to get back over minimally 497.8 and start to move back to 502. The bears, really, we need to be under at least 494. That's kind of that pivot level you can see right here, going back to here on the 13th and also these 3 days right here. Now we go over to ES. I have showed this chart numerous times, 6 other times to be specific. One thing that I find is interesting is if you look at the spacing of the arrows, this represents, it's pretty much the representation of when we touch the 20 EMA support. So you can see right here on the 10th, and then right here on the 7th, we got to the 20 EMA, basically lost 8, bounced off 20. That was in the middle, about 29 days. And then we got right here, the 7th to the 5th, that was about 27 days too. These two drops right here average 28 days from touch to touch. So then we move from this touch to this touch, about 14 total days, including weekends. And then from this touch to this touch, again, about 14 days. So you can see the time that it took to retouch the 20 EMA support going from here to here and here to here was half the time it took the first 2 times. Now you look right here and we have this touch to here. This is only 4 trading days and we already back tested the 20 EMA. So the question would be, is this time different? Is it different? Is FOMOC minutes, is NVIDIA earnings, is all this enough to finally send this market lower? We will find out tomorrow night. I will try to do a video tomorrow night. What's tomorrow? Tomorrow's Wednesday. I probably won't be able to get a video done tomorrow night. We have our foster classes on Mondays and Wednesdays. And so, but Thursday I'll be up here. I'll have a video out for you guys on Thursday, and we'll kind of see where we're at. One big important thing I noted today on ES is that 49.60 to 49.73, this double demand from back here and from the 2nd through really the 14th held beautifully today. We did officially touch 20 EMA support though on ES, unlike on SPY. So same thing, we're under 8 EMA. The bulls need to either double bottom and push back up at least the 50.19 area, or the bears, they need to take this opportunity and take us under 49.60, and we're looking at a bigger drop to 48.70 area. Going over to the Qs. So, I mentioned last week that SPY had lost its support from this bull channel right here. As you see right now, the Qs also lost its support from that sell-off here. I got to get rid of that level right there. There we go. So, looking at this here on Friday, we put a new supply in at 434.51. So we now have a double supply at 434.51 to 436.59. This is a major resistance level. So, you see here, we basically almost have a perfect double bottom with this candle from the 13th. So this, 427.3 support area is a major level. We either need to see, and we did get a hard bounce off of this 423.7 demand right here. Actually, sorry, you know what? I took the wrong level out. Let me see there we go. Hold on. Okay, so this level should be gone. There we go. I'm sorry about that. That's my bad, guys. Sometimes when I'm doing these, I just happen to click the wrong one. But anyways, so we did get under previous support again from here on the 14th of 431.09. So you see we're below. We have this critical level right here. If we keep going, we didn't quite get under 20 EMA support. We were super close to closing under the 20 EMA here. But again, we have a nice doji reversal like here on the 17th, which makes you think pop to the upside. If we pop to the upside, 431.09 is first level. That'll give us back over 8 EMA, and then we got our double supply. If the bears continue our sell-off, our target really is 416.85, which is about the 50 EMA support. Now, going over to NQ here, same thing. We broke through 17,697. We had this 17,701 level. I've talked about this for a while now. Such a major level, super, super important. And we're under that again. So you can see here, we kind of have, this channel right here from this 17,698 down to 17,260. And then we have 17,698 all the way up to 18,040. So basically my target is 17,260, which again is about the 50 EMA. We are closed under the daily 20 EMA for the first time since back here on January 5th. We also, for the first time since January 9th, or is it the 9th? Yeah, January 9th, which is all the way right here, have daily sellers on NQ, meaning that this is a justified drop here. Now, the VIX, as you can see, basically since, back here in our low, our 52-week low, and also it was about a three-year low, we have just steadily been kind of rising higher. Every little spike is a little bit higher. So right now we have 15.84. That is Tuesday CPI days, resistance, and supply. We came up to it. We looked pretty hot for a while, like we might be able to hold over it and break through it. However, of course, they crushed the VIX. We had a pretty big, looks like a shorts covering rally again today. But we did get a new demand at 13.92. So you can see over time, we are slowly working up our support areas. If we break through 15.84, it is a much bigger breakout to the 20s. If NVIDIA misses tomorrow and markets have a pretty negative reaction to FOMOC minutes, I really think we could see the VIX go back to the 20s over the next month or two. And I really do think a daily 50, maybe even 100 EMA retest, about a 5 to 10% correction, is very plausible. Now, when we look at the dollar, the dollar and the 10-year kind of had a little bit of divergence today. So what I mean by that is, we've been seeing that the dollar and the 10-year have been trying to push up with the market pushing down. Today, we got to push down on the markets, and actually the dollar and 10-year pushed down too. So right now, if you can see here, basically since December, the dollar's just been steadily moving up. So So right now we came down, we had a nice bounce off 20 EMA support, also off 150 and 200 EMAs, all right here. This is the 200 right here. So we are holding what used to be, you can see this was resistance from basically January 17th until the 2nd when we broke through. We came back down and we are now holding this as support. We're also holding 104.018 demand from back here as support. The bulls are going to need to see this drop back through to target 103 area. However, if the bears can bounce here and head back to 104 to 105, that all plays in again to that bigger downside move coming in the markets. Now, looking at the 10-year here, same thing. We've been steadily since about mid-December, slowly building up. We have a nice little bull flag that's working here. We came down, we bounced off daily 8 EMA support. We held 4.236% area, but we did put in a new supply at 4.295%. So essentially we have a triple supply at 4.295 to 4.33% and a double demand at 4.179 to 4.236%. If we break down and close under 4.179%, likely we're going to see a big old pop on the market. If the bears can get this back over 4.33% and start heading up into the mid fours, I think that correction's coming. Looking at Bitcoin real quick here, we are popping. You can see here we're attempting to maybe turn down, maybe get a double top here. I was holding some Bitcoin ETF. I did sell today, about 10% gain on that. So that's in my wife's portfolio. We're kind of just for fun, basically for full port something, and just try to ride it for a 10 to 20% gain on some sort of individual ticker. I've rode anything from Google. I don't know if I think I did Amazon once, AMD. What else have I done? Tesla, of course. A couple things like that. So, pretty good returns there. I think that account's up almost 50% in about a year. So not too bad on just plain straight individual tickers. I'm not sure what I'm going to be doing next on that account. Keeping my eyes out and some feelers out. Kind of maybe Amazon, maybe Google, or maybe Tesla again, depending on what the next kind of week brings here. So, all right, guys, I hope you guys had a good day trading today, and I will see you guys tomorrow.